Hello, everyone. Welcome to the Cost Code Show presented by Nullify. This is a podcast where we focus on helping trade contractors run and grow their businesses. Today, I'm excited to be joined by Jack Biltis. He's the CEO and one of the founders of eBacon, a payroll technology and service provider focused on prevailing wage and certified payroll for the construction industry. Jack has a ton of experience helping contractors stay on top of the complexities of prevailing wage work, and he's going to share that stuff with us today. So how are we doing today, Jack?
Great. How you doing?
Very, very good. A little bit cold here in upstate New York, but I'm hanging in there. So holidays are right around the corner.
You should try Phoenix.
Yeah. So for folks who don't know you yet, Jack, can you give us a quick look at your background? How'd you kind of get into the prevailing wage certified payroll world?
Sure. Our company, eBacon, we've always been in the payroll space for 20 something years. And about 10 years, we've always done a certain amount of prevailing wages, certified payroll. And they're all kind of synonymous terms for today's conversation. And so we had government contractors, construction companies doing some kind of government work. They did a little bit of certified payroll, and we did what most other payroll companies would do. We would print out the main reports and things like that. Not too heavy. We had a client in 2017 reach out to us and needed a whole bunch of additional features. They were doing a great amount of prevailing work, and it was taking them 70, 80 hours a week just to get payroll done and all the reports and all the calculations and everything. And we always like the challenge. So we already developed our own software. So we made a couple changes and realized that we could do a whole bunch for them. And from that, we said, if we could do it for them, this is just an Arizona project. And we said, oh, this is, easy enough. And from there, we said, this isn't that terrible. So let's get a little bit bolder and go into California. And how much worse can that be? And then we found that California is a couple orders of magnitude more interesting than every other place in the world. So we decided to take all the pieces of our software, the payroll, time and attendance, the benefit calculations, the 401k, all these pieces that we already independently created. And by modifying them, having them fit together a little different, we felt we were in a unique position to just solve everybody's problems. And on average, a client that goes from 50, 60 hours a week dealing with payroll and all that stuff, we get it automated. We get it shrunk down to about 20 minutes a week. So we've completely headed into that in the last 10 years and focus on making people's lives a lot easier.
That's amazing. That's a serious reduction in admin time spent. I'm sure you have made a lot of folks very happy with that.
Yeah, it's been great.
So what kind of contractors do you typically work with? Like what kind of trade sizes, that kind of thing? Is it specialty trades or GCs or all of the above?
It's a little bit of all of the above, but really it's people actually performing their own work. We have two products. We actually have three products. 90% of our clients are specialty contractors where we're doing everything from soup to nuts, where their employees are punching in to our system. We know based on the job that the employee is working and the task that they're doing and where the county, what county the job's in and all those things, what rates to use. So from the punches, it automatically goes into, we calculate all the required rates out of the 180,000 different rate determinations that are out there. We calculate all that. We know all their benefits and what they're offering employees from health insurance, 401k to time off to all those things. So we automatically calculate what the credits against those rates should be. So that automatically happens. And right from time and attendance, you hit a button, the net rate from all that stuff for each employee, for each punch goes right into our payroll system. We run the payroll. And then when payroll's done, we generate all the certified reports, California 131s, WH347s, LCP uploads, all that stuff. So we do everything soup to nuts for 90 something percent of our clients. The other 10% are GCs where they need to stay compliant. And so they have their subs submitting into our system. And so to make sure that they're getting paid all the right rates and all that stuff. So 90% of the time we're doing all the work. 10% of the time we're a submission system to help track and make sure everyone's getting paid the right rate. And then our third product is a trust system to save clients money, but we can talk about that later.
So it's a very comprehensive kind of end-to-end solution, which leads me into my next question. You mentioned this time savings when we got started, but when a contractor comes to you, what are they really trying to solve for the most part, as far as certified payroll is concerned? Like what's the big challenge? What are they trying to improve?
Biggest thing is compliance. Besides the amount of time it takes them to just go through all the steps before they come on with us, it's compliance. We had a client that made some very, I would describe, innocent administrative mistakes in calculating some rates before they came on with us. They had 100 employees, and because of a couple of mistakes that added up to about $70,000 of underpayments across 2 years, state of California fined them $7 million. So the penalty that the government likes to get you for is huge. Making small mistakes adds up huge. They got that down by dealing with lawyers over a couple of years from $7 million to $700,000. But then when we met them, it wasn't a hard sell because they recognized that not only is it easy to make a lot of mistakes, the calculations are so complex, between the rates and the credits and all that stuff, but there's so many people out to get you. You got the government regulators, you got the unions, you got the whistleblowers, you got in California, all the PAGA lawsuits. There's just too many ways, too many people trying to get you to fail. So they need someone to stay in compliance. And also a lot of companies are getting into this for the first time and they just don't know what they don't know. So they use us to help them get up and running in the prevailing wage world.
Got it. So with those kind of penalties, it sounds like having a really strong kind of process is a key kind of component to staying compliant, I should say. Could you kind of break down, like thinking about your best run kind of clients, what an ideal certified payroll process might look like, week over week or month over month?
I mean, just the mechanics of how it should work.
Yeah.
Yeah, sure.
Yeah, absolutely.
We've got it down where every time a client sets up a new job, let's say they're using QuickBooks or whatever accounting system they use, the job automatically funnels into our system. Our system then asks a couple extra questions like, okay, when was this job advertised or awarded? We already know the kind of work the client does. We need to know the county. And then from that, we direct the client into, okay, it's one of these three determinations wage determinations that the government publishes that you'll need to use. The client looks at it and says, okay, this is the right one. Because a lot of times they don't get guidance from the GC or from the government agency of what to use. So we help them figure out what determination to use. They pick it. They have multiple types of work they do. They pick a couple determinations. At that point, they're done with their job setup. And that could be done well before they ever get into the job. As far as employees, they set their employees up well in advance because that's just kind of part of the normal payroll and benefit management function. And then, naturally they're going to manage who has what insurance and who gets PTO, just because, again, just part of the normal flow of paying your employees. So all of those things we try to keep as low touch as possible, where just organically we already have the information with just a couple questions. At that point, employees, based on their GPS location or when they're at a job, or based on their schedule or limiting what they set up in their schedule when they're at a job, they can clock in, clock out their tasks. We really try to make it for a client to look like just regular old payroll. You just have employees just self-reporting, switching between one task and another. At one point, you're excavating a hole, and then 10 minutes later, you might be putting a conduit in. So just change a task and do that. So you want to get the employees, get the information as accurate as possible when they're punching. And then the managers or supers approve that. And at that part, all the hard work's done. The system then, by the time the administrator is ready to run payroll, all the rates and calculations and fringe benefits and all those things are done. So unless they have bonuses or commissions to pay, it's really just, okay, everything's got approved, run payroll, and then gives you all the reports, because when you set up the jobs, you told the jobs which jobs need what reports. So it just generates all the reports, and then they can just submit them off, and that's done. So we really try to make it where they're not having to think about this stuff. It's really set it and forget it.
Nice. I like that. It sounds like there's a fair amount of coordination between the field guy or the field team and the in-office team to kind of make these jobs run smoothly. Is there any kind of tips you might be able to offer based on what you've seen as far as kind of keeping these two different groups like in sync with one another, making sure the field guys are entering time or the job classifications properly, and making sure that gets back to the folks running payroll, accurately and promptly and things like that?
Yeah, in most situations, that coordination's a little bit tougher than the way we focused it, because there are two different groups, two different timelines trying to go back and forth, and you never get good information as far as what rate, if this job was even a prevailing job, all that stuff. We've tried to revisit the whole way it works and just when the job's set up, it pretty much limits the field people on what what tasks the person can do. And we don't have them get complicated into, is this a labor group 4 category or labor group 2? At that point, those decisions should have already been made. So we just say, what are you doing? Is there a task for, painting? Is there a task for cleaning debris? Whatever the person's tasks are, we then work with the with the office who has to deal with the compliance side. We've mapped out the simple tasks to the classifications and the groups and all those things. So we really try to make it for the field guys just simple. Just tell us what you did at the times that you did it. Just punch in like normal. You don't have to know how the sausage is made behind after that. And then as long as the hours are accurate and the punches are relatively accurate, all the hard work gets done by our system and as a function of processing payroll. The biggest area where that becomes contentious in a lot of times is when information wasn't right the first time and they find out after, when they bid the job, they didn't realize it was a prevailing job. No one mentioned it. Or the guy punched in hours, the guy forgot to punch in his hours, or someone punched in that they were doing this type of task, but they're really doing a different type of task, or the rates were wrong, or something like that. The biggest conflict that those two departments have is information changing after the fact. And in the construction world, it just does. That's just a reality. So it took us a little while to understand that dynamic. And we built a whole restitution system where, okay, if anything changes, maybe it's just your general contractor saying, hey, we don't want this to be labor group 2 engineering. We think it's labor group 2 building, and that gets changed. So it's as simple in our system as go in after the fact, after everyone's paid, the report's been submitted, just change it. Let the system reprocess. The system will tell you what it originally paid, what it now needs to pay, what the difference is. Hit a button, it'll pay the difference, run new reports, and that's it. So you really want to get the people out of the whole back and forth thing and saying, okay, if something changes, let the system just do the hard work for you. And that right there, we had a client where the state came in, they decided that they wanted to change something arbitrarily just to show that they could. And they changed everybody's punches for a day. And it would have normally taken the client 3 days to recalculate and reprocess and figure out taxes and all that stuff. And we got it down to about 50 seconds where they just mass changed everything, hit go, it redid everything, and no work to be done. So the automation is the main thing that'll keep the two different divisions in tow with each other.
Got it. Okay. I wanted to also talk about, we've been talking a lot about, I think, folks who are already kind of doing this work and kind of like common mistakes and things like that. For someone who might want to, like a contractor that might want to get into prevailing wage work for the first time, what are some kind of things they should know to set themselves up for, success off the job?
The main thing everyone says is documentation. You got to make sure that, for instance, the employees' hours are properly documented, that if you have an audit and when you have an audit after the fact, that you can show proof that's exactly what the employees punched in for, that in California, they took their required breaks, that they worked where they needed to work, that if you had apprentices, that they show that there was a journeyman on staff at the same time. So all these things you have to have properly documented. Nowadays, the government's made it so difficult that you really need an automated system to help with that. I would say for a new company coming in, we usually do a walkthrough. If they've done enough to at least bid the job and they bid it properly, then we really help them with, okay, what determinations you need to use? Are your classifications actually accurate? Should this be a labor group 2 or a labor group 4? Let's take a look at the determination and see what the scope of work is. So that's the kind of stuff where you really want to set your groundwork on if you're using the right classifications, right determination. And again, most importantly, can you trace back what you paid the guy to what he actually punched in, how you calculate the rates, and can you show proof that you paid him everything you need to pay him, and that all the other things that you need to pay to calculate your fringes, your 401k and all that stuff went to the various places. So those are all fall into the category of record keeping. That's really what we've focused, solve that problem, especially for new companies. That, being able to prove that the $2.87 credit you took for health insurance for this guy, how did you justify it? Okay, he gets his insurance is $400 a month. times 12 divided by 2080. Okay, you come up with a number. This guy's employee plus spouse, his insurance might be more expensive. Being able to back into all those calculations and show to your GC or anybody else how you calculate, that's your biggest thing, being able to prove every number that you have is right.
Got it. Is there a way, do you guys kind of recommend like sort of a path to kind of ease into this type of work at all? Or I'm wondering if it's easier to get started with like maybe a smaller job, or if, it's with something like eBacon, it's possible to kind of like just jump into a huge project, or do you kind of have like an on-ramp you recommend for folks?
Yeah, the on-ramp, the difficulty of the certified stuff doesn't really change with size. If you can physically do the work for a large job and it's not going to overwhelm your resources, then do as big a job as you think operationally you can handle. In some places like California, the only change to your operations is that you have to deal with like apprenticeship and all that kind of stuff. And talk about that in a second. You got to make sure you either have apprentices working, which if you've only done private up to now, you might not have ever used apprentices, or you at least have to go through the process of requesting apprentices. So that way you don't get penalized, even if no apprentices ever show up. So that's one example of an actual change to the operations of your construction site, making sure that you've bid enough to cover the costs. An electrician in Arizona might make $15 an hour. Electrician in California might make $25 an hour. An electrician doing a prevailing job in California is going to make $50 an hour plus another $30 of fringe. So that's $80 of cost plus taxes and all that stuff. So you just your biggest thing is if you bid it correctly and there's enough money in the job, then operationally you'll be fine. All the compliance stuff, I would say, call us up, we'll walk you through it, and we can ramp you up pretty quickly. So I wouldn't worry about the size.
Got it. You mentioned California and needing to have apprentices on site. Could you maybe get into that a little bit more?
Sure. So California is one of the harshest states that has an apprenticeship requirement if you're doing prevailing wages. And you got to realize that prevailing wages, especially in the bluer states, are something that the unions think that they own. And so if you're a merit shop, a non-union shop, and you're getting to the prevailing wage space, you're dealing in the union's territory, and they have lobbied the rule so that the rules make you pretty much comply with all the things that the unions already could do in terms of apprentices, in terms of paying these really high prevailing rates, in terms of skilled and trained workforce, all these things. So one example in California is, on average, you have to, they want to encourage apprenticeship. So for every 5 journeymen that you have a site or working a job, you have to have at least 1 apprentice. And then the ratio changes a little bit, but that's the general thumb. It's a 5-to-1 ratio. And if you don't, you get fined, or you have to pay that apprentice a higher rate. And there's all kinds of trouble you can get into if you don't do that. The issue, though, is you can't always necessarily get an apprentice. They might not be available. And you could either have your own, if you're a big enough company, you could either have your own apprenticeship program where you train them or put them to like an ABC or something like that, go through their training program. And ABC does a wonderful job with that. Or you could just dispatch apprentices, which means that you have to fill out a form called a DAS 140 and then a DAS 142. And you have to request apprentices. And even if the unions don't send you any apprentices, at least you filed your forms on time, and then you have a get out of jail free card. You said, I filed, and whether I have apprentices or not for a particular job, I've met my requirement. If you didn't file, you didn't fill out one silly piece of paper, then all of a sudden you're in for tens of thousands of dollars of fines on that same job. So just one example that we did probably back in 2020, we just automated it where every time a California client starts a new job, it's automatically going to email all the apprenticeship shops in that county. And then the client has proof that, yep, they did it. Now, 99 times out of 100 or 95 times out of 100, they'll hear crickets. They won't get any apprentices, but at least they can show that they've met their requirements. If they do get an apprentice, then they got to maintain ratios and stuff like that. It's not terrible, but it's definitely something that you can get in trouble if you don't do it right.
Got it. Okay. Could you break down as well the concept of like job classification? Since we're talking about someone who's trying to get into this type of work, I think that can be rather overwhelming. So Maybe you can kind of break that down a little bit and simplify it for folks.
Sure. So again,
if that's possible.
yeah. Job classifications, again, they tend to follow the union nomenclature in that area. So what kind of trade are you? Are you a cement mason? Are you a laborer? Are you an electrician? Multiple classifications. You do a lot of different things, a carpenter, all that stuff. To the extent, let's say that you have employees doing laborers. So if you're doing things like carpentry, there's not a lot of subclassifications within there. It's okay, you're carpenter, you're a carpenter. You pull up the determination and it'll list one type of carpenter, and maybe like bridge carpenter and other things that are a little bit more exotic, but one type of common carpenter that most people do for buildings. And you're like, all right, that's it. You read the scopes section, you're like, yeah, that sounds like what I do. Pretty straightforward, pretty easy. To the extent you're doing things like an operating engineer, running any kind of machinery, backhoes and forklifts and that, or to the extent that you're a laborer, then if you look at the determinations, it'll have labor group 1 are these rates, labor group 2 is this rate, labor group 3 is this set of rates. And it'll go up to, let's say, labor group 8 sometimes. And you look at the back of the determination, it says, okay, labor group 1s are anybody and it'll give you a lot of different things that somebody could be doing that falls in labor group 1. Labor group 2 is stripers and painters and this. Labor group 3 is, and it'll give you, and you need to basically look at, out of all the things that fall into the different groups, okay, my people are generally doing this. And if they do a little bit of both, then if you can specify, okay, for this job, for this time, they're doing these things, which are maybe a cheaper labor code. And during this time, they're doing the more expensive stuff, and you can keep good records and split their time by the different tasks they're doing. Okay, easy, great. You pay the lower rate for some and the higher rate for others. If on the other hand, it's murky and a guy does a little bit of both and you can't really split out the hours, then you just got to pay the higher code. And it's a couple bucks an hour, one way or the other. So that's one thing we encourage our clients to do. Set up as many tasks in our system as possible. Use just normal English names that your employees would understand, and they'll pick what they're actually doing. And then let us set up the mappings of this goes to that, and keep it simple. The important thing is for your employees, keep it really simple. And let all the classifications and the rates and all that stuff just happen. All the complicated stuff happen on the back end.
Got it. And where do you actually get the wage classification or wage determination, I should say, like information, like all those rates? Is that something your GC would typically provide, or do you have to go to like a third party or government website to get that kind of info?
Government websites. They're pretty much all published. In some cases, we have to actually call the government websites for some scheduled increase allocations, stuff like that. We actually have to call the California DAR or whatever. But for the most part, if it's a federal job, it's going to be published. Federal's called Davis-Bacon, which is where we get the name eBacon. We decided to do something fun from an otherwise boring subject. But the federal stuff is published on the Federal Department of Labor websites, and then each state publishes their rate schedule. So if it's a federal job, you use the federal rates. If it's a state job, you use the state rates. If it's a joint job, you have to load them both in and pay the higher of the two. And if there's a job it only gets extremely complicated when it's what's called a PLA job, private labor agreement job, where that one job has to be paid at union rates. So then you have to also load it in union rates, or an apprenticeship situation where you have to load in apprenticeship rates. So in our case, our system just takes all 4 different rates and compares and combines them. But that's just, one thing. Those are the areas where you'd have to call and ask if it's a PLA job or a job requiring special apprentice rates. Otherwise, yeah, the rates are published by the state or by the federal government.
Got it. You talked about it a little bit before, the concept of paying fringe. Could you maybe get into that a little bit? Explain what that is, get into that a little bit more.
Sure.
Any best practices related to that?
Yeah. So typical determination, let's say if you're a laborer, it'll say you have in San Diego County for a job that got awarded relatively recently, you might have a $25 base pay rate. You got to pay your employee at least $25 plus a fringe rate of another $20. So a total of $45 an hour. Now for your union, no problem. The employee is going to get paid $25. That extra $20 is just going to go to the union, and the union in their infinite wisdom is going to decide what benefits they're paying their employees and what they're keeping for themselves for profit, but it just goes to the union and that satisfies the requirements. If you're a merit shop, you're going to find that you might be very generous in what you're offering health insurance, but you do the math and you're like, health insurance, I'm paying, let's say $400 a month to my employees. That's $5,000 a year divided by 2,000 hours a year. So $2.50. So you say, okay, I've got a $20 fringe requirement and my health insurance gives me a $2.50 deduction. Maybe I'm doing a 401k match. That gives me another dollar deduction. Maybe my PTO sick vacation is another $1.50. And you add all these things up and like, all right, maybe that's $4 of credit. So you got a $20 requirement and you add up the benefits you're naturally offering this individual employee. And I got to mention that the credit you could take for each person is based on the benefits that individual gets. So his PTO, his health insurance, you can't do a generalized credit across all your employees. But then you got some benefits, you got what's called annualized, where you get divided by all the hours worked, both prevailing and private. Some benefits you can do just over the private rate. So you do all that and you figure out, let's say $4 credit. You get a $20 requirement, $4 credit, now you got $16 left that you got to pay or that you owe your employee. So the government says, if that's all the benefits you're offering, then you could give them that $16 in cash, meaning add it to their paycheck, add it to their wages. And in some states, you have to then apply that to overtime as well. So you're now paying time and a half on that as well. And since you're paying wages, now you got to pay FICA and Medicare and SUI and FUTA. You got to pay workers' comp. Sometimes you got to pay GL on all that. So you're paying, let's say, another 15% on top of that. So that $16 adds up, it's going to cost you an extra $3 an hour in taxes and workers' comp and whatever. So what we do is we figure out their credit. We make sure that our system is taking the maximum credit available for each employee. And companies are really scared to take credits because they don't want to do it wrong. So a lot of times they don't take credit for things that they should be. So one thing we do right off the bat is we make sure they're getting a credit for every penny they can. And we automate it so it's not a big deal for them. And then in that case, we say there's $16 left to pay, instead of having to pay that in cash and have it subject to taxes and Medicare or taxes and workers' comp, we then give the employer the option of putting that into a fringe benefit trust where the employee still has access to all that money. They can do all kinds of really great things with it. They can take distributions from it. Now the employee and the employer are protected from a lot of those taxes. So it's a win-win for everybody in that situation.
Got it. Very cool. So it's a way to kind of simplify that side of things for the client, and the workers get some additional benefits as well. Cool. So I wanted to maybe just get into any kind of like measurement or metrics. Notify is like a pretty data-driven company. That's one of the things we like to empower our clients with. Is there any kind of like metrics or measurements or KPIs that a client could look at to make sure they're on the right track with a prevailing wage job, or kind of be like a big red flag, like we're going down the wrong road, we need to make some changes?
It really comes down to your margin. Each client runs at their own, but yeah, typically 16 to 20% profit is what most clients are looking for. So when they're bidding, the best KPIs say, all right, whatever you're bidding for, you need to make sure you're starting with the right rates, right fringe and all that. You got to make sure because I've had clients bid off the wrong determination and they just screw themselves. They underbid by $2 an hour and that kills all their margin. But yeah, you start with the right determination, make sure you're adding the right classification, how many hours in every classification it's going to cost to do the job. And then make sure you're bidding. And if you find there's really two metrics. One is just sheer dollars, make sure that they're making their expected margin and that their actual wages and actual fringes are what they planned on. The other KPI that we encourage our clients to use is as we're tracking their real time, and this is not purely for Prevailing, but this is construction in general, now, whether they use our time and attendance system or Notify's time and attendance, we don't care. We're agnostic about that. That's just time collection. And we import Notify's information with a really good integration with it. But as those hours are coming in, we'll track those hours against whatever's budgeted and whatever percent completion, the job's been done. And I know Notify does that already, a lot of that already. And their system's much more sophisticated in terms of that part of the tracking. So that's the kind of the biggest KPI. So whether you already use Notify and they're doing it, or one of our existing clients that isn't using Notify, but hopefully might be using Notify someday, tracking your percent completion versus your percent budget, knowing which jobs are in the red, green, and yellow. Because if you're not paying attention to your job and they're going over budget, then hard to recover from that.
Yeah, absolutely. So we're getting sort of close to the end of the interview. So I have two more questions for you. I'm hoping you can answer. The first one, so looking forward, to the year ahead, do you see any kind of like big picture changes happening with prevailing wage work that folks who are, in the trenches doing this type of stuff might want to know about and anticipate, or, same thing for folks who are new or trying to get into this work, they might need to kind of accommodate at the last minute there.
There's always new regulations that pop out. The two big ones that were effective this year and are going to be effective next year, both involve fringe calculations. So California, they passed AB 889, which requires annualization on things that didn't require annualization before, which means that if you were paying $1.50 to $1.50 an hour on your journeyman for your training fund, all of a sudden, if that journeyman's only doing 50% prevailing work, even though you're paying $1.50 an hour, you're going to only get 75% credit on that. So that's a big thing happening January 1st. And we've already programmed our system to manage all that, but contractors definitely need to know how the mechanics of that work. Another thing that's popped up recently is the Department of Labor has clarified their rules related to PTO, and they strongly are doing things to discourage companies from taking easy credit on their PTO policies, their vacation and sick. And they've introduced a whole funded versus unfunded. So if you have a normal vacation policy that every contractor has, says, all right, after you've been a year, you get a week, after 2 years, you get 2 weeks, whatever it is. That's called an unfunded policy because you're not taking that money and socking it away somewhere else. So you got to get prior Department of Labor approval. It's not practical for a lot of clients, a lot of contractors. So we've created a product for that, which is a funded PTO policy where you can operate it very similar, but we hold administrative funds, and that way you don't require Department of Labor approval. So those are probably the two big things that have popped up that a lot of contractors are talking about right now.
Got it. Good stuff to know. On a similar note, we like to try to make this podcast like as kind of actionable or action oriented as we can for folks. So if there was like one big thing you would recommend to a trade contractor that's looking to be in a better place as far as certified payroll, prevailing wage work is concerned, what would that be?
I'd probably say use an electronic time and attendance system.
Okay.
Obviously, I don't want to make this an advertisement for us. There's a lot of time and attendance systems that are all equally good out there, but the old days of keeping track of the stuff by paper, it doesn't hold up when you get audited. It makes your life harder, and it's hard when you're running a regular construction business. It's almost near impossible for prevailing wage. So that's the first big action item, I would say. Make the jump to an electronic time and attendance system. If you then also want to have something where it does all the other work on top of that, great. We'd love to talk with you. But at the very least, on your own, get a time and attendance system and have your employees clock in, because it's too complicated to keep track of all this stuff and do all the calculations on paper.
That makes sense. Makes sense to me. Good stuff. If someone wanted to learn a little bit more about eBacon and what you guys offer, where could they, go to take action there?
Yeah, real simple. They can email sales@ebacon.com, and I'd love to chat with them. They can also, if they prefer calling, 623-580-4900, and just ask for somebody in sales, and would be thrilled to just walk them through it. And one thing about us is we'll walk you through your situation. We'll give you as much free advice as you want. And if it makes sense for us to do something with you, fantastic. If you just need a little bit of confidence building and just make sure some of the decisions you're making, we're also happy to just talk through with you. And if it makes sense to do something with us as a client long-term, great. If not, we're happy to just build a relationship and give you some free advice, and maybe you'll revisit us at some point in the future when that makes sense for you as well.
Fantastic. Well, thanks, Jack, for joining us and sharing all this awesome knowledge about prevailing wage and certified payroll. And if you need help managing your construction projects or construction finances, please visit notify.com to learn a little bit more about Notify. We will be back with another episode of the Cost Code Show soon. Thank you for tuning in. Take care.